Well, hello, Matt.
JP, how are you?
I'm great. Just getting this thing going here. Yeah, Happy New Year.
I know, right? It's
It,
crazy that time of
it,
year already.
it is, and this will be a quick one today. We didn't intentionally color coordinate our outfit, but it sort of worked out that way.
It happens. Great
Um,
minds.
but listen, I wanted to talk about what's on top of everyone's mind, which is that dirty word inflation and
Hmm.
how it's impacted us as operators. Both on the operating side of the house, and then on the acquisition side of the sponsor world, which I could talk about. But how about you bring up some of the things that you've seen
Hmm.
as our chief officer for operations for our property management company, how inflation has impacted things on your end, and we'll go from there.
Yeah, so I would say obviously, materials and pricing and everything is completely different. So one of our properties, for instance, we purchased this about 2 years ago or now or so, just over 2 years ago. And obviously, when we established the pricing and what we were going to be doing to those specific homes and common areas and all of that. Um, we were using one set of pricing, and then over the course of the last 2 years, pricing has completely changed, both on labor and material side of things. So, it's a matter of, maybe giving up some things over here to be able to have something a little bit nicer over here, just being able to afford, those different standard, features and functions that we're trying to include into each one of the homes. So, there's definitely been a big fluctuation in give and take. And I'll also say too that, again, this is something that a lot of people don't necessarily recognize, but it is a problem. So there's obviously the element of labor, and labor again has gone up substantially over the last couple of years.
Yep.
And one of the challenges that you run into is you can find a smaller company that can do the work, do the renovations, whatever it is, painting, flooring, all of that type of stuff, right? You can find a smaller company that can do the work for less expense. But typically, those smaller companies can't afford to carry any kind of a balance very long. And sometimes you can't process their payments or pay their bills quick enough, again, just because of the cycle that we as operators have to go through, right? Where we have to apply for a draw from the bank, and then the bank sends an inspector out, and the inspector's got to do his report, and then the bank has to approve all of that and send the money. So, like, by the time all of that is done, 2-3 weeks have gone by, and maybe this guy can't afford to carry that kind of a load.
Yep.
So
Yep.
so like, you can get a better price by going to a smaller contractor. But then you run into these cash flow issues, or their cash flow issues end up being a problem for you. Or you can go to a larger company that can afford to carry that load,
Carry the load. Yeah.
carry
Well,
that credit for you, but then they're going to be more expensive.
w-
So
what about other things like boring things like water, utilities, insurance?
yep, yeah. So actually, insurance is another whole other story too, which obviously utilities have gone up, across the board. There's only so much you can do with that. You can't really, and insurance too. You can't really, there's no real levers or anything like that you can pull. But it's definitely more expensive, and has blown out some budgets. Again, we're compensating for that by increasing our utility bill back, our RUBS programs, and all of that to try to compensate for those increased utility costs. But one of the unexpected things that we didn't necessarily forecast, and I don't know if everybody really recognizes this, that this is a real problem, is with the insurance side of things. And when you're dealing with the insurance companies and the lenders who require what they call full replacement coverage, so meaning if a building or a facility is completely demolished, what is it going to cost to rebuild that property, right? um, so because of inflation, this is all done through modeling and everything. They basically plug in the parameters. We've got 5,000, 10,000, 50,000 square feet, whatever the size of the building is. They plug that all in, and okay, to rebuild that particular size building, it's 15 million or it's $20 million, whatever that amount is. You have to pay for that insurance, right? And obviously all of those prices are based off of today's prices, which again are inflated because of inflation. So you now have a much higher insurance premium than what you would have a few years ago, because again, these prices have fluctuated so much. So that's an element that a lot of people, I don't think, necessarily understand how tied together all of these industries, all of these markets are, and how one thing impacts something else.
Let me add this piece to this. So we've got, it's funny, I keep getting these I watch YouTube a lot, and I get these ads. Back when the elections were going on, it was like Raphael Warnock, if you're here in Georgia, let's tell him to stop with the runaway spending to curb inflation. And your senators and your congressmen aren't causing inflation, by the way. It's the Federal Reserve. But in their quest to stop inflation, all these unintended consequences have done the very thing that they're trying to undo, which is stop inflation. So for example, water bill goes up, insurance goes up because cost of the goods go up. So the cost to replace them has to go up. So your insurance goes up. Our interest rate for our loan has gone up because they changed the interest rates, which was trying to slow business down, but it's making things more expensive. And now the operating margins for the business are a lot lower. And in order for us to do what we need to do, like, they need to be at a certain point. And so what lever do you pull? You pull the raise the rent lever. What does that do? That raises the cost of living for the people that live there, which further drives inflation, right? And so it's just absolute lunacy to see all of this what seemingly never-ending cascade of looping events that it go through. It's absolutely maddening. And on the acquisition side, what we're seeing is it's kind of a good opportunity to leverage all these things. Rates are high. We have to underwrite higher costs for things. We had a deal, Matt, that we were looking at. I forgot where it was. It might have been in Tennessee or Kentucky or somewhere like that. And I remember seeing the guidance when there was a marketed deal. They wanted $160,000 per door. Okay, fine. But when we plug it into our model, when we put in all of these increased expenses, the new interest rates, all these stuff, at that number, the deal is negative returns. Okay, so you start lowering the purchase price to see where it makes sense. Is it 150? No. Is it 130? No. Is it 100? No. I think for that deal we were in the 80s, 80,000. It's a huge gap of discrepancy. And so we went back to the broker and said, I don't know who's going to buy this at 160 a door. We can barely make this work at 85, only to get told that the seller has kind of changed their pricing expectations. So what I'm getting at here is, if you're in the buying phase, right, you're waiting for that moment, the moment where the market crashes and it's a good opportunity to buy. Everyone's still kind of waiting, I feel like, and some people realize this is the time. This is the time to go in and take advantage. If you've got the cash and you've got the dry powder, you can go in if the seller's motivated and they're in a funny spot, and try to make up for all of the crazy price increases that have happened over the last couple of years. And so on one hand, it kind of hurts us operating the properties, right, and having our budgets and trying to stay in those budgets. And then there's things that you can't control, right, and then that kind of blows things out of the water. And then the other end, if you're going into a deal, trying to be able to capitalize on the environment and buy right as best you can. What do you think about that?
Yeah, no, I completely agree. And I feel like, this is again, you don't want to keep waiting, right? Because, this opportunity, as it were, will end up passing you by. So one of the main things that you should be asking is, why are these people selling? What is the motivation, right? And, if they're not motivated, then,
well, that guy, he said, I'm pulling it. I can't get my number. I'm going to wait until there's a better time.
Yeah.
He doesn't have a gun to his head.
Yeah, exactly. So you want to find the people that have the gun to their head, and that's where, the opportunities actually are. So, spend as much time, as you need to be able to understand what those drivers are, and don't get sucked into, these situations where, people are still have these pricing expectations of, a year, even 6 months ago, right?
Yeah,
I mean, there's still plenty of people out there that feel that way. And again, those are the people that don't have a gun against their head. They don't need to sell. And again, they can wait it out and, give it a couple of years and maybe they will be able to get those prices again. So you want to deal with the people that can't wait and, need to get out at this point.
That's right. And the piece that I think I'll add here in case it isn't very clear is this, what we buy is we buy older properties, B and C class assets that were built in, the 70s and 80s and newer, right? Even when you buy a deal at 160 a door today, or somewhere underneath that number, between 80 and 160, you're still purchasing it below replacement costs. And the replacement cost today, per Matt's point earlier on about replacement costs for the insurance carriers, is an ever evolving and increasing number. I don't think maybe we'll see stagflation and things go the other way. How much will it be there? I don't know. Does it put it back to where things were in 2020? I don't know. But either way, you're still, from a multifamily investment strategy standpoint, buying these older properties still make a lot of sense. And there's still usually a lot of juice to squeeze out of them. So, that part gives me a little bit of comfort when I'm freezing at night, thinking about these sort of things.
Yep. Yeah. It's so crazy. Like, this is the first economic downturn that I've been through that I can understand.
And Matt's like 100 years old. So
I know, right? Look at all this gray, right? But no, it's so interesting how connected everything truly is. And when you start to understand the economics behind all of, what the drivers are and all of that, how much more it makes sense. Like before, it's just like, the years past 2008, it was kind of, I don't know why this stuff is happening. And now, now we understand, some of those levers as to why things are happening and what the true issues are behind, some of those causes.
Yep. All right. Well, Matt, I promise we keep this a short one. This is a short one today. Let's reconnect next week. We'll talk about some more things that I think are on top of people's minds. Otherwise, Matt, thank you.
Thank you.
You're looking great in that sweater.
Yeah. You look good too. Good color.
Thank you.
Matches your eyes nicely.
Yeah. All right. I'll see you next time, Matt.
All right. See ya.
Bye.
Bye.